If you've been in crypto for a little bit, you've probably heard or even experienced how Bitcoin moves and then the L1s move and then the tokens on those L1s move to gain market share. A lot of people are talking about how that currently could be happening right now, and that's why I want to talk about Lenfi, one of my favorite lending protocols on the Cardano blockchain. I always think in every DeFi ecosystem that DEXs and lending protocols can be the key winners for the native tokens on any L1, and if your DeFi ecosystem is booming, you're definitely going to want to take a look at these. So for Cardano, one of those you can look at is Lenfi, and I want to talk about why it has the potential to do a crazy return, possibly over a 30x to $100. Now before we break down some price, I want to talk about what Lenfi is and what can make it different or special or unique, and why I've chosen to invest into it. So Lenfi is actually a really simple thing when you break it down. It's essentially started out as a P2P lending platform, and it still has that functionality, but it has also moved to a lending pool-based platform currently. Before I break down lending pools versus P2P, I also want to talk about how Lenfi has a couple things you need to look at. You know, you can use it for a lot of things, much like AAVE on Ethereum. You can do it for doing DeFi plays, for taking loans against your crypto so you don't have to sell your crypto, or for even earning interest on your ADA. Currently, you can earn 3 or 4% in a stake pool, or you can lend out your Cardano and earn upwards of 5+%. So having DeFi in an ecosystem is always beneficial for people to both lend tokens out and borrow tokens so they don't have to sell their positions. Loans on Lenfi are not tied to addresses like they are on AAVE, but they are tied to NFTs. When you take a loan or are a lender or a borrower on the platform, you'll get what's called an NFT bond, and it's basically a receipt. It's a receipt in the form of an NFT, and what this receipt says is that you have this loan, you can sell it to anyone, you can transfer the loan to someone else, but basically this is the ticket that gets you your collateral out of that loan. Now on AAVE, where they use the address model, if you don't have enough money to repay your loan, that collateral is locked there forever. You can't sell the loan to someone else based on the address model. But on Lenfi, when we use the NFT bond model, if you run out of money to repay your loan and can't get your collateral out, you can always sell your NFT, sell it to someone else, and they can repay the loan and get the collateral out of the loan for you or for themselves, right? With every lending platform, liquidations are also possible. The thing you need to know about liquidations on Lenfi is if your health factor goes below 1, you have the opportunity to be liquidated. Now every token on Lenfi has a different liquidation threshold, so based on the token that you are lending or borrowing, you just need to check with what that liquidation threshold is, and based on that liquidation threshold, you just need to know how much collateral you can take. I'll put the collateral numbers on the screen, but if you're interested in lending, just go look at the documentation for proper identification of what those lending thresholds and what those liquidity thresholds are. But the brass tacks of what Lenfi is very simple. It's a way for people on Cardano to either P2P lend money out or lend money through these lending pools. With this platform on Cardano, we have the ability to use our ADA or our Cardano native tokens to earn more tokens. You know, if you're gonna be your own bank, you need a way to earn some interest probably, especially if tokens are inflationary, right? Cardano is not really inflationary, but it does have a little bit more supply that it needs to release, and there's money in the treasury. So some people are always trying to fight that inflation with staking rewards or with products like Lenfi to lend their money out. People will always need to use their money that they make, especially if they make $10 million on a meme coin. They want to have access to that capital, but might not want to sell their positions, whether it's the meme coin or ADA or whatever. People don't want to sell their crypto, and instead they might be more interested in pulling a loan out of that crypto, changing it to USD or USDM or JED or something, and then using that for cars, houses, and Lambos. Lending protocols will always be needed in crypto, especially in a thriving DeFi ecosystem. Now, before investing into Lenfi, if you are interested in lending or borrowing on the platform, just using it as a Cardano user, there's a couple things you need to know. You have two ways of going about doing this. You can do it P2P, which is really the old way and it's not super recommended anymore, but you can do P2P lending. What you get from P2P lending is there's no third-party interaction. There's no pools, there's no other people. It's you, a borrower or a lender, and someone else, aka maybe like me or someone else on Cardano who's also the other side of the borrow-lend relationship. With P2P lending, you can get higher interest and higher returns on your loans, but it comes with more risks. Now, there's less pool-based risk, but there's more risk in the fact that one single lender or one single borrower has the potential to not handle their side of this relationship. Borrowers have the ability to just not pay back their loan, and when you're doing it on an individual basis, it becomes more likely that somebody won't pay back their loan, and then you have to take the collateral that they're willing to provide. Now, yeah, collateral is always over collateralized on this platform, so you do get more money, but then you have to go through the process of like changing it and transferring it and all that stuff. So there's higher risk with P2P in the fact that that people don't have to really hold up their side of the bargain. They can let the collateral do the talk and the work for them. Users got to meet in the middle with liquidity requests and borrow requests. So there's not always an exact match of what you want and what you get. You kind of got to meet with what's available in the marketplace, but then it comes with more rewards where you can get more interest or get better loan terms if you kind of know who you're working with on the other side, or can put a loan out and have someone just randomly accept it. And it also has higher levels of transparency. You kind of know what the other party's doing and you know what you're doing as well. P2P is the old method. Lenfi does not really promote this one as much anymore. And in fact, now we are doing lending pools on Lenfi, which have different pros and cons to P2P. The immediate con of using a lending pool over P2P is that you can earn less interest as a lender. You can earn less interest simply because of the fact that everyone's pooled together and we're profit sharing together. The pros greatly outweigh the cons of lending pools in the fact that anyone can create a lending pool on Lenfi. What this does is it increases the decentralization of the platform, of the ecosystem, and of the offering for lenders and borrowers. In a model like this, one lending pool can go down without affecting the other lending pools around it, and it really allows for very seamless and very decentralized market dynamics for lenders and borrowers in the Cardano ecosystem using Lenfi. This lending pool system also allows for lenders to pick the best possible scenario for themselves, which increases the need for people creating lending pools and earning a fee for their lending pool. It makes it a requirement for them to have good pool dynamics. They need a lot of liquidity, they need good lender return, and they need good borrower interest rates. They need people to pull from the pool to pay back their lenders and then make the pool grow, right? So in order to do this, you need a very fair market dynamic, which lending pools allows, because anyone can create a pool. These pools can change at any time. The amount of ADA in the pool can change, and from that, any pool can go up or down in value based independently on its own resources. The most attractive pools are going to do the best. The worst attractive small tokens that just don't have a lot of liquidity and don't have good rates probably won't survive as well. But as more native tokens on Cardano arise, more pools can be created and there's going to be more competition for these lending pools. So watch that for now. I wouldn't be surprised if like some entrepreneur comes in and starts creating different lending pools with different pairs and weird pairs that, I don't know, maybe don't make sense now, but make sense in the future. That is definitely a market dynamic to watch and a probable business model you might want to look into. The last thing I want to talk about before we talk about the price of Lenfi and what I think, how I came to the 37x conclusion. How did I do that? Before we talk about that, I want to talk about the tokenomics of Lenfi, because with all of these platforms, the platform utility and the platform reason for existence are always very, very important. But behind that, you're going to buy a token. And what does this token do, and why does it have a purpose, and what makes it important to hold or important to invest in? These are very important questions. So let's talk about the tokenomics of Lenfi before we get into the price prediction. The major things you need to know about Lenfi's tokenomics is that in the inception of the tokenomics, around or over 50% of the tokens were given to the public. And now I calculated that through a few things. I got my cheat sheet down here, but that was from the public distribution, the public round, the token liquidity, and the staking overall. So I like to see these tokenomics where the public is getting 50% or more of the tokens for a DApp or an L1. It makes me really understand that they're caring about the community and the people that are essentially supporting their project's success. The next thing you need to know about the tokenomics is that it's a capped supply token, so no more are going to be created, and they actually reduce the total supply of tokens from about 37 million down to 29.5 million currently, and there's never going to be any more tokens than 29.5 million Lenfi today. The last major thing you need to know about the tokenomics is that almost all of the vesting is complete. Based on what they had in those private rounds and kind of some pre-seed investors, all those seem to have vested either on 12-month, 6-month, or 24-month bases, which was started in January of 2022. So in March 2024, that's over 2 years. So a lot of those have been completely finished. Now, based on what Lenfi is currently talking about and currently shows in their distribution graphs, I think about 28 million of the 29.5 million total Lenfi is out. So I wouldn't expect any more crazy liquidity events to happen. It seems almost impossible, and it seems like the token is fairly launched. A lot of resources for the public were there. The tokenomics of the cap supply is great. And then all of the liquidity seems to be out almost. So I wouldn't expect any major liquidity releases. These tokenomics are very, very good for a project like this, and it makes me confident that buying into a token, you're not going to have any crazy tokenomic events happening, and mostly it's going to come down to what the market thinks about the product. Above all else, I think that these tokenomics are very sufficient for a leading lending protocol on a blockchain like Cardano, where Cardano has very fair tokenomics, and then the DeFi apps on it should also have those similar parallelisms to fair tokenomics and fair token structuring for a retail investor. Now, how did I get to $100 Lenfi, and how is this price prediction working out? Or like, how did I do this analysis, right? What am I thinking here? So Lenfi is currently around a $2 token. On a weekly basis, it's ranging between $2 and $4 currently. But what I like to do is figure out what is something that I think I could easily compare this to. And for Lenfi, I think that that's AAVE. Now, Lenfi is currently a $2 token, or kind of like around a $2 token when I last looked at these analysis. The market cap was around 30 million, and the fully diluted market caps are around 59 to 60 million. For comparison, I think Cardano is a leading competitor to Ethereum, and that's basically what this analysis is based on. If you think Cardano is a competitor to Ethereum long term, then you probably think something like Lenfi is a comparable competitor to something like AAVE. Last cycle, AAVE went from $60 to $400, and today AAVE is sitting at $136 per AAVE. It has a fully diluted market cap of $2.1 billion and a market cap of $2 billion. Now, these are very, very high numbers compared to Lenfi, and this is where I'm getting my analysis from. If you take Lenfi's 59 million fully diluted market cap and multiply it by 37, you get 2.1 billion approximately, which is approximately AAVE's fully diluted market cap itself. So if Lenfi was going to match in the bull market in the 2025 peak, what I'm saying here is if Lenfi in the peak of all peaks in 2025, at the last day, the very top of the cycle, can get 37x from where it is to a $2.1 billion fully diluted market cap, then it will be worth over $100. Now, I know what you're probably thinking. You're probably thinking, man, Lenfi being $2 billion, is that crazy? Well, I like to think about it like this. AAVE currently is half of its all-time high. Its all-time high was $400. It's currently $136. This is a seasoned DeFi product. It's a major lending protocol on one of the biggest chains in all of crypto, Ethereum, right? And so in this beginning start of the bull market, last edges of that bear market, right? We're in the beginning of the 2025 bull market. We're not post-halving, but we're pre-halving. And this is currently the valuation of AAVE. If Lenfi is a successful product and if Cardano is a successful product, how could Lenfi not reach in its peak of all peaks this current state of what AAVE is in? I expect AAVE to grow. I expect it to break an all-time high or get back to an all-time high. I expect AAVE to get back to its multiple billion-dollar valuations up at the $400 price mark. And if that's going to happen and AAVE and Ethereum move to those levels, if Ethereum becomes a $5,000, $6,000, $7,000 coin, AAVE will move up with it. And when those move, Cardano is going to move and become a $5 token. And from there, Lenfi will have the ability to move up into that kind of $100 range and become this $1 or $2 billion fully diluted market cap token. That's kind of what I think about it. If we can take Lenfi at its peak bull run and compare it to AAVE's current pre-peak bull run, pre-halving price, I think that's a very fair and realistic assumption of what Lenfi could do. I'm definitely not saying that Lenfi in 2025 is going to be the same as AAVE in 2025. I expect AAVE to be much, much higher than Lenfi based on its historical value, based on what it's done and its past performance, right? AAVE is a more seasoned token, it's a more seasoned product, and Ethereum has more users, it's a bigger chain, right? I don't think it's unrealistic to compare Lenfi's peak in 2025 to AAVE's start of 2024. Wrapping up this video, Lenfi is one of the leading protocols for lending and borrowing on Cardano. You can use it in a lot of different ways. DeFi, but lending, borrowing, earning interest, and not selling your crypto in order to get some USD or to do some different DeFi plays. Maybe there's a new ISPO you want to stake to and you need some ADA. Maybe there's a new NFT project you want to join and you need some tokens. These are different things you can use Lenfi for. Not only is it becoming more decentralized by moving away from the P2P model and into the lending pool model, but it's also changing the game with NFT bonds, having lending pools, and really bringing Cardano lending and DeFi into a new era. While your ADA is in a lending pool, you're still earning staking rewards, and it's really helping Cardano to show the power of all these things that it's done for a very long time and is just now kind of becoming in the spotlight for. The staking model was always cool, but the fact that you can use it in a lending protocol that uses lending pools is even cooler. Lenfi is definitely something that I would check out, and not just because I own some of it. I own 400 Lenfi currently for transparency, but I would always suggest you look at the other lending protocols on Cardano and check out what they have to offer. Lenfi has always just been one of the leading contenders in the space, in my opinion. I have always said and will always say that the top DEX and the top lending protocol on any DeFi chain is something to look at, and it's something I look at when I go into L1s that I currently like or new L1s that I'm looking into. Let me know in the comments if you're currently using Lenfi, if you're in a lending pool, and what lending pool you're a part of. Do you own Lenfi? Do you think it's a good investment? And do you think it will hit $100 in 2025? Also in the description, we got some awesome Cardano t-shirts and merch to help support the channel. Other than that, I really hope you enjoyed the video, and I hope you take a look at Lenfi and the other lending protocols on Cardano. Other than that, I hope you enjoyed the video, and we will definitely see you in the next one.